Hi, I'm Matt Culkin, co-chair of Steptoe's Financial Services Group. Welcome to another episode of Financial Services University. We're pleased to present a series of short focused conversations with my colleagues from across our firm's practice groups and offices around the world. Today we're going to talk about EU cybersecurity regulation. I'm joined by my colleagues Charles Albert Helleputte, who heads our EU cybersecurity data and privacy practice, and my colleague Diletta Cicco, both based in our Brussels office. Thank you both for joining. So let's start, Diletta. We've all heard about ransomware, especially in the age of COVID. So let's maybe start with the basics. Can you tell us what is ransomware? How do threat actors operate?
Thank you, Matt, for the question, and hi, everyone. In short, a ransomware is a form of malicious software, also called malware, that is able to block access to a computer system by encrypting data with an encryption key that is known only to the attacker. Various types of data can be encrypted by the attacker. For example, the attacker may encrypt confidential business documents, client data, or even employee information. After the data is encrypted, the attacker directs the victim to pay a ransom in order to receive a decryption key. In some cases, the attacker will steal the data before encrypting it and then threaten to release the information publicly on the so-called shame website. Or in the worst cases, you might just find your data on sale on the dark web. There are various ways hackers use to exploit vulnerabilities and get into a company's systems and network. Ransomware can get into a company system by clicking on an improper website or link, or by way of an unprotected Wi-Fi connection, or even if one of the employees inserts an infected USB. Ransomware can also have serious consequences. In addition to the obvious data loss, cyber attacks can have other financial, business, and legal consequences. Financial consequences can vary from loss of profits to credit downgrade, or even price drop or the abortion of a transaction following an attack on the target company. While business consequences may include business disruption, loss of service, frozen or corrupted data, as well as physical damage, executive resignations, or even harm to the company's brand. Finally, legal consequences may include regulatory investigations and potential litigation. Ransomware can also have serious consequences for users. For instance, in late July, Garmin was eaten by a ransomware called Wasted Locker that forced the business to shut down Garmin Connect, the website used by users to synchronize data about activities for a few days. If the same thing happens to a bank that is forced to shut down mobile banking applications, the consequences for users will be certainly more serious. If you're hit by a ransomware, you also have to distinguish between two types of hackers. Nation states, who are primarily focused on causing actual harm to the company by stealing data, versus gangs, that are usually just interested in making money out of the attack. And in the recent years, money making is becoming even easier with the spread of ransomware as a service, which is a ransomware that, just like a software as a service application, is sold on a cloud-based subscription model to someone who is willing to pay the subscription fee. The rise of the ransomware as a service distribution model is indeed giving would-be criminals an extremely easy way to launch a cyber extortion, with virtually no technical expertise required, flooding the market with new ransomwares. Finally, a common factor on ransom payment is that cryptocurrency is very often the preferred payment method. This raises interesting practical and legal challenges that we will discuss later on, but before getting to those, I think it is important to identify things that will impact the decision to pay or not to pay the ransom. When you wonder whether you should pay a ransomware, you might think of what you would do in case of a kidnapping. No one will tell you to pay kidnappers, but by the time it is your son, friend, or wife, you just want them out. So when making the decision on whether you should pay the ransom, various factors need to be taken into account. Whether you have available backup for your data, what is the cost-benefit ratio, or the assessment of the chances to actually get the decryption key are some of those. And you might also want to consider that, according to the Ponemon Institute survey, 45% of ransomware victims did not receive the information to decrypt the data, even if they paid the attacker ransom.
Well, you've already frightened me and given us a lot to think about. So thank you for that sort of stage setter. Let's drill in a little bit now to financial service industry specifically. Charles, if you can talk about maybe some factors or scenarios or regulations that are unique to the financial services space.
Yeah, thanks, Matt. And indeed, I think it's important to set the scenes for the financial industry, and they can probably be targeted in many different ways. And I'll just briefly touch three of them. So first, and very similar to the scenario that Diletta just described, you can have a financial institution being subject itself of a cyber attack with severe consequences. You have headlines all over the place. And we know by experience, but also by some of the surveys that are available out there, that the actual cost of incident for the financial industry ranks amongst the highest. Second, you can also have a financial institution suffering of an attack somewhere else in its supply chain. Because in the financial sector, like many others, you have long supply chains, especially in the technology level, and very often you will have or could be faced with impairment of your service because of an attack at the level of one of your suppliers. Imagine, for example, and also it's something that was reported in the headlines not so long ago, that a cloud service provider hosting data just has to shut down for a little while. That has a direct impact on the way you can actually run your operation, even if you are not really the subject of the attack. That prompts very different legal questions than being subject to the victim itself. And among those questions, you will have reporting requirements to prudential authorities, but to other supervision or law enforcement authority, for example. But you will also, let's say, pile or have on top of that other legal questions like liabilities, contractual claims, eventual litigation, and as Diletta mentioned, also eventually some harm to the brand. Thirdly, and that's a factor or a situation that is probably less known, but that is very relevant for the financial sector. Very often you will have financial intermediaries, for example, acting to enable or facilitate the payment of the ransom of one of their clients to those gangs or cyber criminals. There as well, and even if we saw that the question of paying or not paying is already a very complicated question to answer, as an intermediary acting for a client that is willing to pay, sometimes you might just not be able to do so because, for example, facilitating the payment will breach some of the sanctions laws that exist. They are known in the States with recent OFAC and Treasury recommendation and settings that precludes or make it more complicated to pay ransoms to cyber criminals. We have very similar rules in the EU, and that's something that just start to be enforced and that needs to be seriously watched. Let's say, contrary to other type of sanctions, one of the difficulties you have when you are a bank that needs to eventually deal with those sanctions is that attribution of attacks is very difficult. So it's good to see that someone is on a list of sanctioned criminals, but then you will have to take your own risk mitigation measures to see whether and how comfortable you can be that Bitcoin account is indeed related to that specific group. So that's, let's say, in a nutshell, the type of scenarios, let's say, where as a financial institution you can be confronted with those type of things.
So thank you for that. Let's pivot a little and talk about some of the regulatory components that are at play here. And I know that the EU in particular has been in front in terms of imposing prescriptive cybersecurity measures. Can you talk a little bit about the work that's being done on the continent and what that might mean?
Yeah, and that's really a fair point, because in the EU, contrary probably to the United States, the many regulators have really decided to step in and publish like legal instrument to deal with those type of issues, taking a very different direction than best practices that you might have on the US side. Really, in the EU, we are known, let's say, to pile up regulation, and unfortunately for the industry, sometimes those different regulation don't really speak well together, and I'll just try to illustrate that, let's say. First, we have a set of prescriptive rules that apply to a limited number of actors in the industry, and those will be coded by a set of rules that we know as the NIS directive, that is clearly targeting only critical sectors, and within those critical sectors, only a limited number of actors that are so important that incidents that are taking place at their level will have a significant impact for the public, let's say, at large. Okay. Financial sector is one of those industry or sectors being covered by NIS, and a number of different participants in that sectors are subject to NIS. NIS is what we call in the EU jargon, and we probably need another video to explain EU jargon to the US audience, but that's not really what we are trying to have here. In EU jargon, NIS is a minimum harmonization rules, meaning that that's a kind of minimum level member states should introduce in their own domestic rules, but they are allowed to go deeper or to introduce other type, let's say, of requirements domestically. And then you directly see a point. So it's really a lack of harmonization between member states, meaning that it's very complicated for those who are designated as operator of essential services, so those institutions that are designated and coded by the rules, to deal with not only one set of prescriptive rules, but with potentially 27 different sets of rules. Those rules, by the way, not only tackle how to deal with cyber incident, it's an important component of it, but those rules also cover other aspects like resilience, preparation, and similar, let's say, security culture, the promotion of security cultures across those organizations. A side effect of NIS is that even if it's only applicable to a limited number of participants, the industry has been trying, and rather successfully, to push the requirements down the chain by imposing by contract across the supply chain some of the requirements they had to deal with. So that's also important to factor. So that's one set of rules. Then, as I said, we have the great benefit of having multiple ones, and we have like sector-wide cyber incidents and preparation rules. And one example of that is PSD2, so a set of rules covering basically payment service provider. Those payment service providers need to specifically put measures in place to be able to deal with incident. And of course, incidents are not the same as the ones that are described and covered under NIS. Their reporting framework is different. The time frame to report is different. All of that, of course, just to put at ease those who are subject to the two. And then you will have one that is known to many, not to say most. You have much wider regime such as the GDPR, so the General Data Protection Regulation, who of course is focused on privacy, but who has an important security component attached to it, because the regulation clearly recognizes that security of the data is a very important component to allow you to be accountable and deal with personal data in a accountable way. And also, as you all know, GDPR has also its own set of incident reporting type of requirement if and when a data breach is occurring. So as hopefully we can grasp, so it's a rather complex ecosystem to navigate with different rules and sometimes conflicting rules amongst those different frameworks.
Well, and that sounds, what you just described sounds very different than some of the American financial regulatory regimes that I work with regularly, that have a much more principles-based approach rather than a prescriptive line-by-line provision, which can work both ways in terms of demonstrating compliance. But I'm curious. I want to sort of pivot and look forward a little bit. You've just described a fair amount of regulatory burden. What do you see on the horizon in terms of cybersecurity, resilience frameworks, and additional material?
Yeah, and as I said, so we are probably in the EU champions of cybersecurity regulation, and unfortunately or fortunately, it seems that regulators tend to like the financial sector and wants to put even more and go even further. So thanks, Matt. So we indeed had very recently, end of September, a new EU Commission proposal as part of what is called the digital finance package. And one component of the package is about promoting cybersecurity resilience all across the financial sector. So it's a kind of new NIS that we just described earlier on, but then applied all across the sector. So you will not be able to escape. Everyone that is regulated in the EU and falling within the scope will be eventually subject to those rules. What those rules are, as you described, they are indeed going really very far away, let's say, in imposing prescriptive rules rather than best practices. And the regulation or the proposed regulation try to achieve 5 different things or cover, let's say, 5 different elements. I'll not go into details in all of them, but it's important, for example, that to realize that the proposal includes ICT risk management framework. Those basically are introducing the NIST best practice into law. And so you will have all of the phases of incident reporting now set in a piece of regulation directly applicable all across the EU with an EU flavor to it. The regulation will also seek to have harmonized incident reporting requirement, which probably will be this time seen as a major achievement for the sector, because hopefully you will be able to more easily overcome some of the issues that you have currently. It also seeks to promote specific testing, including penetration testing, so being like mandatory for the most critical piece, let's say, of the ecosystem. More interestingly, the regulation also seeks to regulate third parties that are critical for the sector and will put, let's say, them as if they are a regulated financial industry or institution to some extent, ensuring that they don't mess around and have also taken the steps for cybersecurity resilience. Finally, and that is something that is closer to the US, but it's good that it might be coming over here. There is an whole bunch of the regulation who seeks to promote trade information sharing amongst the industry. something that is existing long ago in the US and that eventually finally will come here with the same hurdles such as antitrust compliance and for all pieces privacy compliance as well, but that might be a good thing to come. Of course, that has just started. Proposal was issued end of September, and it's not for tomorrow or after tomorrow, but it's certainly something to be watched.
Thanks, Charles. And Diletta, I'm going to let you have the final word here. I know in my experience in the US that often a cyber incident is only one of a compounding series of offenses when something happens, right? So there's the actual incident, there's a potential reporting obligation or failure, there's a possibility that the compliance regime was insufficient or it wasn't tested properly. So as you work with clients on these types of matters, I'm curious what your advice is or what the takeaways should be from our conversation, particularly in the financial services context.
Thank you, Matt. And indeed, in line with what you said, I have 3 recommendations. The first one is be prepared for a ransomware attack, as this is the only way companies have to effectively be able to respond to one. This is usually done by having an incident response plan in place, which is a document that details the steps that a company should follow in case of an incident. And that also details, for instance, what are the various tasks that people within the company should perform. The incident response plan should allow you to gather all the facts around the event, remediate vulnerabilities, and mitigate the associated risks. And also, for instance, should allow you to assess who should be notified about the incident. And this, for instance, is quite important if we think of the different frameworks Charles just described that might apply in the financial sector. My second recommendation is constantly review your incident response plan and your cybersecurity measure. It is not enough to have an incident response plan in place, but you need to test it periodically. This is usually done by, for instance, conducting penetration tests or tabletop exercises. The tabletop exercise is an exercise based on real-world experience in a roundtable environment that evaluates your organization's cyber crisis processes, tools, and proficiency in responding to cyber attacks. Tabletop exercises help determine how your team will react to a theoretical cyber attack and how effective your plan is. By discussing the scenario in advance, you can identify flaws or gaps in the organization's response and make adjustments. Finally, the third and last recommendation is, when hit, play the book. Ransomware might indeed lead to panic attack situations, and the company might just want to immediately react and, for instance, pay the ransom. However, this is not the best strategy, and it is better not to improvise. This will be indeed the right moment to put the procedures a company has in place into motion.
Thank you for that. And Charles, Diletta, thank you both for joining me for this conversation.
Thank you.
Thank you, Matt.
So that does it for another episode of Steptoe's Financial Services University. Today we talked about EU cybersecurity regulation. You can watch more of our Financial Services University videos and get more information about our financial services practice at steptoe.com. Thanks for watching. We'll see you next time.